Hey everybody, Spartan here from SpartanTrading.com. I wanted to talk to you guys a little bit about some continuation plays. This is kind of a trade review and a more of an educational type of review because I want to show you exactly what I look for when I look for continuation into the next day, a continued momentum plays. It's an extremely simple strategy. I've been doing it a lot this week and it's been working extremely well. We've been doing it on things like Netflix, Roku, which are a little bit more complex examples. I'm going to show you some very black and white ones. Netflix, Roku, Nvidia, etc. Basically looking at stocks that have been pushing to the upside, closing out strong, and looking for continuation the next days. It's a great strategy to be using, especially if you want to get those larger gains on the option side. You cannot be cutting those trades off at the end of the day. You have to let them run. So the first part of that strategy would be to understand it more on a simple, simple side from an equity standpoint. So let's take a look at Tesla, for instance, here. So this is one of my Tesla trades that happened on, the 13th to the 14th, I guess. So basically, I was long Tesla in the morning there, full size around the 603 level, 605. I was selling it on the way up. I added into the 635 level, sold a little bit more, and at the end of the day, I decided to hold the trade overnight. Decided to hold the trade overnight. It gapped up, and I was up, basically 100 points and change from the original position on Tesla. Now, this is what I like to call a continuation play. The whole concept behind it is looking for a chart that's closing out strong. So, very simply, what I'd like to do is I'm just going to hide all these studies, etc., because this is a very simple strategy. All we have to do is we look at two things. We look at the daily chart, we look at the hourly. So let's look at the hourly first. At the end of the day, what I want to see on the hourly is the stock closing near the highs, the last candle closing near the highs, and if it is either closing near the highs or at the highs, there's a high probability of continuation to the upside the next day. The next thing you want to look at is what's going on in the daily chart. If the daily chart is showing you there's no resistance above or it's breaking out to the upside, which in this case, Tesla was breaking out to the upside here, broke out of that range to the upside, had room, broke out of the range there, had room basically above that level into the next resistance, which was, I think we got to go back just a little bit. Now, primarily it's got room to around this area, this new range, 802 to the 733 level, which we can see it's up into the 733s here. If it looks like it's got room on the daily chart and it's closing near highs on the hourly, continuation is highly probable, and that's a good position to stay in overnight. So it's pretty easy to see it on this Tesla. Clear breakout on the daily, clear close in your highs on the hourly on that day, and then we can see that the stock did end up gapping up, and it worked out nicely. Let's take a look at another example. ZTS. This is one options play that I took the other day, and not ZTS, sorry, ZS. And I swung it into today. I ended up selling the rest of it today. Same sort of concept. Let's take a look at the stock on the daily first. You can see, daily chart, pretty simple. Range break to the upside. It's got room for continuation higher. Not really any resistance above it. Clear picture of a stock with some room without resistance in the way. On the hourly chart, I'm going to flip back to an hourly here. So on the hourly chart, we can see the stock closed near the highs, right below that range break area, and on the daily it was already breaking out. High probability of continuation. This is a great options play to take overnight, very black and white, and you can see that I took the options at 10 cents, and then the day before I was locking some in at 20 cents as you usually do. Go up 100%, you lock some in, and then the next day I added into it today, actually 40 cents, and then I sold most of it up here at the 60-cent area. So, 10 cents to 60 cents, added 40. The original position, that's 500% on the add. A little bit more profit because of it, but pretty straightforward play, looking for further continuation to the upside, all based off of the hourly, all based off of the daily. It's something that you can implement basically every single day. Stocks that are trending higher, closing at highs, tend to go higher. Stocks that are breaking out tend to go higher. And this is pretty logical stuff. It's pretty black and white, easy to follow along. If you want to, make those larger percentage gains on the options, it's simply finding what has momentum and then just holding that position as long as you possibly can until that trend breaks. That's what's going to give you those 1,000% runners, etc. So just wanted to give you a little bit of insight into that because I've been asked about it time in and time out, especially over the last 2-3 days because there's been so many runners that we've been in and we've been holding. So if you guys like this video or want more detail, you can reach out Spartan at spartantrading.com, or you can go to spartantrading.com, take a look at our website there. If you want more information in terms of the exact technicals I'm using, what I'm doing from a trading standpoint in terms of sizing and scaling in, scaling out, and looking at the technicals and how I use different time frames to stay in these positions a little bit longer, basically with my entire system, you can look at the webinars on our website where I go over all that stuff. Anywho, that's just what I wanted to go over today. Hopefully this video gave you a little bit of insight, guys, and have a good day.